Okay, fam, welcome back. So today we're going to be going over how to position in crypto at the basically how to get out at the peak of the bull market and how to get back in at the bottom of the bear market. So with that being said, let's get it. Okay, so first thing I want to start with here is that usually when people take profits at the top of the bull run, they usually don't take profits at the top of the bull run from Bitcoin. Okay, because Bitcoin has usually already topped out. Altcoins are usually the last thing to run. So when people take profit in crypto, they usually take profit on the altcoins, and then that signals the end of the bull market. So, what is a good way to be able to tell this? Well, there's a few different ways. So, I'm going to show you guys this. And again, we may not go over this kind of content again until the bear market. Again, that's a long ways out. That's roughly about 12 to 15 months out. But my goal here is to help you guys become prepared for when that time comes so you can take advantage of it, because I can tell y'all right now, 98% of people that get in crypto probably do not understand these things. They just want the free gravy train. They're looking for quick money. They don't care about the process. There's a saying that I love to live by, and that is master the process and the money will follow. And a lot of people just don't care about that. You know, they want the immediate gratification, oh yeah, give me the 50x gains right now. But they don't want to do the work to actually get to the point to where they can understand how everything works in a universal perspective in crypto to be able to take advantage of that and get well ahead of the curve instead of trying to, how do I want to say this? They can be at the top of the hill before everybody else. While everybody else, when the bull run kicks off, everybody else is trying to sprint up the hill, to get to that point. They're trying to catch up to being, basically, it would be the equivalent of the Fed being behind the curve. Instead of being behind the curve, you want to be ahead of the curve, right? So that's what I'm trying to show you guys how to do here. Okay, so one way to be able to tell this is basically the green years, okay, the yearly chart, so 3 green years. Basically, the gist of this is to know that after the third year has taken place, the biggest, most parabolic green year, usually we get a bear market year after that, okay? So 3 green years and then the bear market year. So usually around the third green year is when we are looking to potentially exit our positions and prepare to sit on cash and cash equivalents or put money in dividend paying stocks or something like that while the market is dumping into that fourth year, which is the Bitcoin bear market and crypto bear market year. So I'm going to go back to the weekly time frame here. And I'm going to show you guys some other examples of what to look for to kind of spot a bull market top and a bear market bottom. So one way to spot a top is getting some kind of MACD golden cross well above the zero line, or not golden cross, death cross is what I meant to say. So getting some kind of death cross above the MACD zero line, that's a pretty good indication that the top could potentially be in this case. I think it was a local top. I don't think it's the actual final top for this bull run. But nonetheless, it's a good idea to have an understanding of how this could affect potentially your gains or losses. The other thing is to look for the RSI getting massively overbought. We told you guys back here that basically, hey, we think like this is kind of a major warning signal. The market's getting extremely overheated. Maybe it's time to consider taking profits. There was even some early indication of that back here in December of 2023 after the spot Bitcoin ETFs had been approved and the thing started moonshotting. It's a pretty obvious sign there, okay? So the other thing I want to point out to you guys is, and we'll go over this more in depth in later videos when I talk about the whales and how the whales trade. Now, again, every whale is different. A whale is defined as someone who has an extraordinary amount of capital, either, in terms of Bitcoin, in terms of stocks, in terms of fiat currency. When I say extraordinary, I'm talking like tens of millions, hundreds of millions, billions, or even more than that. Okay. A Bitcoin whale would be somebody that has like 1,000 to 10,000 Bitcoin. An Ethereum whale would be somebody who has like 1,000 to 10,000 plus Ethereum. Okay. And even people that have 100 to 1,000 Bitcoin or Ethereum are still considered to be whales. Although they're smaller, it doesn't matter. A whale is a whale. So basically, for the bear market portion of it, we're looking for the opposite here. So, and there are other indicators that we use to kind of gauge when a potential bear market bottom is in play. But that's for an entirely separate video. Again, we do have other indicators on top of the ones that we've talked about for the bull run that we use in addition for the bear market. But typically, you want to look for some kind of MACD golden cross well below the zero line. In this case, this did happen. But again, you can see it wasn't perfect here. Okay. It wasn't perfect. So you had kind of this bullish divergence. So you would have thought that on the MACD golden cross at the bottom here that would have been it, but actually that wasn't, because again, the price was still moving down while the RSI and the MACD were moving up, and that indicated that likely the bottom wasn't in yet, that this was a bullish divergence, and eventually the bottom would come in, which did happen. So in terms of the bottom here, so you can see the RSI, anytime this thing gets very, very close to getting oversold, on the weekly time frame, in my mind, that is a pretty good indication that likely the bottom is in here. Okay. There's another good measure to go by here, and that's when Bitcoin bases out and kind of goes sideways. That's usually a pretty strong indication that the Bitcoin bear market is in. Okay. So you can see this big white box that I drew here lasted basically from, actually, if I shorten this a little bit, let's shorten a little bit so we can get this real precise. So basically this little area right here. Okay, so from June 22nd to March 23rd, which is about 9 months, what did Bitcoin do? It went up and down, but more or less, it mostly just went sideways. Okay, didn't really do much of anything. So it was kind of basing out and going sideways at the bottom of the bear market. That's usually a good indication of accumulation. Okay, in this case, we're looking for a bear market bottom. That's what happened. But you can get accumulation all the way going up in a bull market, in addition to the bottom. So we got it here. We also are getting it here, in my opinion, before the big breakout. And we kind of got a little bit of it here too as well. So I'm actually going to go back into previous cycles and we can retest this again to see if these metrics I just showed you are actually accurate here. Okay, so what was I looking at in this previous one? Okay, so yeah, pretty much what I'm looking at here is, again, did we get a death cross right around the time of the peak in 2021 on the MACD right around the top? Yes, we did. The sell-off was much more aggressive, much faster in time than what we're currently seeing, which is why I'm convinced that this was a mid-cycle dump, whereas this is basically a slow bleed accumulation before an eventual breakout. This is a different scenario than this, in my opinion. So the other thing we saw, obviously, you can see the RSI got stupidly overbought here, okay? And we were not even at the peak of the bull run yet, but this shade of green here, in my opinion, would have been, I wouldn't have sold at 20,000 because, again, that would have been the previous all-time highs for 2017, but just note that the RSI was already getting overbought even before it broke out to new all-time highs. So that would have been a pretty strong indication to me, like, hey, maybe it's time to consider it, once this thing starts rocketing, to slowly take some profits off the table. So those metrics are true. In this case, there was actually there was a bit of a bearish divergence here. Okay, so you can see the RSI was slowly making lower peaks as the price of Bitcoin was going up. So that's what's known as bearish divergence. It did eventually play out and this thing sold off. Okay, so once again, going down here to kind of the bear market bottom. So we got this little flag pattern, which is something we're seeing very similar to now. I've actually showed you guys this before. So you see the flag pattern, boom, big rip to the upside. In this case, we're at the top of the move. Well, not exactly at the top, but it looks very similar to this, to 2019. You can see this run up and then a flag, and then we eventually just take off like a rocket to the upside. I think what we're seeing right now is very similar to this. But the thing I want to point out here is basically this, okay? So I could actually do this one of two ways. So I could draw this humongous box here, okay? Absolutely massive box. Again, I don't think this is necessarily the best time to accumulate Bitcoin in this wide range right here between 3,000 to 11,000, but you get the idea here. That is a massive accumulation zone. So what would I have been looking for the bottom of the bear market? Well, it's quite simple. I'm looking for the MACD golden cross. Where did we get it? We got down here at kind of the lows of this level. Again, generally speaking, we want Bitcoin to go to bottom out and go sideways. This was a tricky one. I think that the markets were kind of playing tricks on folks here. So a lot of people probably thought like, oh yeah, this is the bottom. But And I might have been accumulating in here, truthfully, because I probably would have thought it was the bottom two. But if I saw this descending triangle pattern, I thought, okay, this is going to break down. I would have held off from going all in at that point. So, but nonetheless, this actually would have been a good accumulation. But the true bottom was right here. So, again, the RSI kind of tells all. When did the RSI get oversold? When Bitcoin was at $3,000. It didn't get oversold here. So it does actually remain true for the previous bull run, and again in 2017. You guys can see that we got the MACD death cross quite a while actually after Bitcoin had its top in 2017. I guess the more accurate indicator here would have been the RSI. So you can see the RSI just getting oversold all the way up. Yeah, I mean, if I had bought Bitcoin at $1,000 and it was up to $3,000, I would have been slowly looking to take profit going out of here. Yeah, I would have just been slowly edging out of this market because it was so slow going up. I probably would have been taking like 10% off the table every single peak, and every subsequent peak, maybe a little more, 20, 30, 40%. But you guys kind of get the idea here. So, and I can go back even further in time. I mean, we really got to go pretty far back here to actually see this. This is all the way back in, when was this? 2015. So this was the bottom of the bear market after the 2013 bull run. You can see that crazy peak up there. So kind of a similar thing, right? So we're looking for the MACD golden cross. Where did we get it? We got it pretty much right here, $234. Again, this whole area right here is accumulation. Okay. And again, that's kind of what we're looking for. Bitcoin to bottom out and just chop sideways. That's usually a pretty strong indication of a potential accumulation zone. You could even take a look at this bigger zone here and say, okay, that was also accumulation. So basically anything between 500 to roughly about 150. So we got the MACD golden cross below the zero, well below the zero. Again, pretty much almost at the lows, not perfectly, but pretty close. And then when did the RSI get oversold? Or get to its closest point to oversold? Right here on September 2014, when Bitcoin was at 278. And then the true bear market bottom was January of 2015, when Bitcoin hit roughly about $156. So you guys can see this model does genuinely work when it comes to both accumulation, timing bottoms and tops. It's not perfect, but there are other tools that we use for this. So look, kind of the idea here is that you want to get out. Let me actually pull up my drawing tool here real quick. So you want to kind of get out in these areas. All right. So you want to get out in these areas when Bitcoin's topping out and it's kind of just stagnating at the top. And of course, I can't tell you guys what to do. Okay. It's your money. You can do what you want. But in this area right here, as Bitcoin's dumping, I want to do absolutely nothing. Okay. I do not want to buy. I do not want to sell. Okay. I want to have sold up here and do absolutely nothing here. Okay. No buying, no selling. And then I do want to start buying when I see the RSI hit oversold, the MACD golden cross below the zero, and Bitcoin has bottomed out and is kind of basing. And again, there are other indicators that we use that we'll talk about in the future that you guys can use anytime you want to. If you have this charting software, you can use anytime you want to kind of figure these things out for yourself. But I'm gonna show you guys the reason why it's, in my opinion, not a good idea to be buying as the market's dropping. Again, a lot of people, they choose to hold through the bear market. That's fine. We personally did not, because again, 4 years is a long time. We could be putting that money to use doing something else. But here's the reason why I want to say this. Okay, so if I zoom out here, you guys can see we got that death cross. Okay, this was sitting at roughly about, we'll be generous here and say it was at 52,000. So the downside from that 52,000 area to pretty much about where the lows was roughly about minus 70%. Okay. And it took 413 days to get down to that area. 413 days. Are you willing to sit around for over a year on, minus 80% unrealized losses in crypto? Let's say you had $20,000 in crypto and you are just sitting there, minus 80%. So your crypto is actually only worth 4,000. Are you willing to allow that to happen for 4 years when you could put that money to use doing anything else? Okay. Go buy a car, putting that money in the bank, use it as a down payment on a house, buy passive income dividend paying stocks or ETFs, do options, day trade, swing trade, whatever. Are you willing to sacrifice that time? Again, this is a time-based opportunity. If that happens, and the other reason why we don't like buying when it seems like the bear market's in is because I'm actually going to show you something. How long of a period of time did it actually take to get back to that same level? Well, basically, we did not get back to that level. You can see we're at that same level back here in February 2024. So that bear market swing high started in November 2021 and it ended, or we retraced back to that level after this massive cup and handle pattern was forming in February of 2021. Okay, so that's 2 years and 3 months, or basically 833 days. You would have had to sit on your money at a minus 70% loss without hitting the sell button, that is. 833 days you would have had to sit there and wait to get your capital back out of the market. Okay, this is why it's so important, in my opinion, when the bear market, to basically get out before the bear market top. Now, again, pretty much what my game plan would be is to basically say, okay, I'm going to take gains as this thing's getting ready to top out. The RSI is looking kind of toppy here. You can see right here. So in this area right here, I would have been looking to sell everything going into this, or basically altcoins and Ethereum run after this. So I'd be taking a close look at that too. And then do nothing. And, if we get another big boost, like basically when you saw the price shoot back above the EMAs here, I might have played a little bit with crypto on the way up, but then eventually got out before this big, huge dump here. I would have done absolutely nothing in here, and then I would have bought down here at this kind of basing formation when it looked like Bitcoin was pretty much at its lows. Now, you guys are free to do what you want to with that. That's entirely up to you, but I'm actually going to show you guys that you can use these metrics on any asset class, okay? So I'm going to take Litecoin for an example because I know a lot of people talk about LTCN, so let's take a look at Litecoin, okay? Exact same story. Litecoin's top, RSI is overbought, MACD death cross. What happens? Boom, Litecoin goes into a massive bear market. If you had been holding past the RSI getting overbought, you would have held down roughly about minus 80% from the highs to the lows. And again, for Litecoin to get back to where it was prior, the amount of time it would have taken to get to that point would have been 581 days, so almost 2 years. You basically would have had to sit there and wait for your money to get back to break even. And then we get to the bottom of this market and we got this accumulation, okay? And basically this is, in my opinion, this is the best time to be buying, okay? So we got if we look down here at its lowest point, we got the MACD golden cross, then we got a death cross, then we got another MACD golden cross. So basically these two right here, in my mind, when Litecoin was going sideways, great time to buy. RSI did not quite hit oversold, but pretty close. So, I mean, even if it doesn't hit oversold, you can look at this chart and say, okay, it's going sideways, might be a good time to buy. And then the inverse for the bull market. So basically MACD death cross, RSI was getting oversold on the way up. You can see the bearish divergence here. Should be pretty obvious. So RSI going down, price going up, that's a pretty strong indicator that this thing is going to dump. I would have seen that and said, okay, maybe it's time to start scaling out. And then just wait for Litecoin to eventually bottom out again. And what are we looking at here? Basically the exact same thing that I showed you guys on Bitcoin. Same thing, okay? Litecoin's kind of bottom area. RSI actually did hit oversold in June 2022. We got the golden cross down here below the zero, and this was basically it. This was the bottom. I can go even further with this. I can go over to some, meme coin, like let's say, for example, oh, look at the dog, the little doggy dog. All right, so I can go back in time here, and we can go back to the 2020 bull run. Yeah, Dogecoin was not as popular back then because, again, memes were not as big of a deal, but you guys can kind of get the idea here. So RSI overbought. This was when Dogecoin hit basically 2 cents. MACD death cross. RSI overbought was the clear winner here in terms of timing the top perfectly. What happened? Basically, the market dumped off a cliff. If you had been holding down, well, sure hit it for you. Roughly about minus 90%, okay? So Dogecoin bottoms out. It has this stupidly long accumulation, okay, 2 years of accumulation. What do we get down here? MACD golden cross below the zero. The RSI never actually hit oversold, but you can see that Doge is mainly just kind of going sideways. Again, another pretty strong indication that the bottom is in is if you see these coins down roughly about minus 90 to 99% from their previous peaks. That's usually a pretty good indication that these things are pretty close to the bottom. So you can see it was minus 91% there. I'm actually going to do the same thing with LTCN. This is actually kind of hard to do, but yeah, so basically you can see, even though we don't have a ton of history back here, the RSI was overbought back here in November 2020. What did that mean? Basically, that was pretty much the top, and that was the time to get out. And, this market back here was actually extremely generous. It gave you about 6 months to get out at a profit. So that's interesting. But yeah, basically from that point, if you didn't get out during that time frame, and again, that's a generous time frame, you would have held minus 95%. And even to this current day, you still would not be fully in profit because Litecoin is sitting at $15 instead of 510. So, that puts into perspective the importance of taking profits during the bull run. I can actually even show you guys a crypto related stock, like MicroStrategy, for example. This is another good example of what to expect. So seeing kind of the same thing here. Okay, MicroStrategy topped out right as the RSI got to its peak and overbought. And then what happened after that point? We got the death cross for the MACD, although it had dropped quite a bit by then. You can see it had already dropped roughly about 40%. But the ultimate drop here was roughly about 91%. Okay. So what are we looking for on the bottom? Pretty much same thing. Where's the accumulation? It's right here. This whole area is accumulation for basically well over a year. So pretty much anything from, I'd say of course, the post split, roughly about $12 up to $36. RSI got oversold down here. You can see it pretty clearly once, twice, and then it eventually hit the bottom. We got the golden cross down here, well below the zero level. Again, these are very hard to time perfectly, but you kind of get the idea here. The thesis is the same, and then eventually what happened here, we got a local peak. RSI got oversold, or overbought in this case, and then we got a death cross, and then it's kind of been chopping sideways, looking similar to Bitcoin, like it's going to break out to the upside. I could actually do this exact same thing with the S&P 500. So this one is a little bit more difficult to do because, again, stocks is not crypto. They kind of play by a different rule book, so to speak, but you guys can kind of get the idea here. So the RSI got oversold basically during the pandemic of 2020. This thing had an absolute stupid sell-off. I mean, people were just freaking out, throwing their cats out the windows, throwing their bags out the windows, ripping their hair out, all kinds of crazy stuff. So minus 30, almost 35% on the S&P. But what did we see? The RSI got oversold. Got that MACD golden cross below the zero eventually at some point, and then boom, took off like a rocket. And then the opposite happened. Eventually the RSI became oversold. So we kind of have this pennant pattern here to help as well. The MACD had multiple death crosses above the zero. It was kind of sloping down. That indicated potentially a bearish divergence, which should be pretty obvious here. So clear warning sign that the market potentially was about to pull back. And then, during the bear market of 2022, what are we looking for? The RSI got oversold twice, kind of in May, June. It wasn't the true bottom, but it was a pretty good time to get in, if you ask me. I mean, the distance here between this bottom and the next local bottom to it, which was the actual true bottom in October, was not really all that great. So roughly about 3% difference. But again, kind of what I'm looking for here is where's a good time to accumulate? Pretty much anywhere in this area right here. So I actually got to probably shorten this a little bit. So actually probably just maybe something like that. Okay, so you can see this market was mostly going sideways at the bottom. We got the golden cross here on the MACD. RSI had already hit oversold, so that was, generally speaking, during that window a good time to buy. And then, of course, the amount of money that you would have made just buying the SPX or the SPY or whatever would have been absolutely insane in the following weeks, months, and years, plus 52%. So anyways, this is how to cash out during the bull run and reposition during the bear market. Hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.